What does this screen mean? Are you kidding me? Like, can I do something? Can I not do something? What is going on here on this screen? Those are great questions, and let's go ahead and jump over to me and let me actually break down a little bit with this video. I agree with you. There's a lot that we have going on. We have created a pretty solid system with using support and resistance with gaps, and then using some moving averages, and also looking at the higher time frames to kind of figure out the bias. And that's kind of what's going on, just in a nutshell. Let's keep it simple, right? We don't have to get into the weeds here, because really what we're trying to do is use all this information and put trades on, and hopefully turn them into some type of profit is actually the end goal. So that's what we all want to see. That's what I want to see for you, myself, everybody else out there. So of course, this is just information that's out on the internet. Everybody is out there talking about this kind of stuff. It's up to you to do what you see fit. Obviously, manage yourself and make wise decisions when you are learning and educating yourself in this area. So with all that, let's go ahead and jump actually over. I'm going to jump back to that screen that we were just looking at, and let's kind of break this down. So you have the market radar here. So you have the Solana USDT, the BTC USDT, and the ETH USDT. So those are just three options that you can trade in, three tokens that are here on the crypto market. We just kind of look at these because we have found that they're pretty solid. They've been around for a while, pretty rock solid in general for strength. So every single day you can go here, you can click on refresh intel. Obviously this happens in the morning when the session's live and where there's a lot of energy. It's set up at around Eastern Standard Time. The market actually for futures opens up. We're looking at that at 8:30. So by 9 o'clock, all this data gets put into this area right here on this radar, and you can go to work. All you're really looking for is it to give you can see when I run my mouse over to these options, they're red. And when I run my mouse over Solana, or run my mouse up to it, I guess I point at it. If I'm not running my mouse over it, once I run my mouse over it, it goes away, but it's green. So you have two reds and green. So if you're kind of wondering like, okay, is there any trade opportunity in this? So the green, obviously bullish, red, bearish, pretty easy, short, long. Then the other thing is you can see a star that's on here, and the star is kind of giving you an idea like this has the highest probability based on the wind or the direction of the current market. Well, if you're watching charts right now, you'll see that we are in this fight zone. We have some key levels on really BTC. It kind of helps us out. If BTC is overall bearish or bullish, then the rest of the market kind of follows suit, right? But if you do kind of look here, you are seeing that we are starting to push up and change this kind of scenario. So Solana, actually the weekly, the macro is bullish, but the micro is also bullish. So they're both bullish here. The macro, the weekly candle is still bearish on BTC. It's neutral right now, so it's showing you it's kind of in that fight zone. And ETH, though, kind of lines a little bit up with Solana and BTC because the macro is still, the weekly candle is still bearish, but the micro, the shorter time frame is bullish. So what we're looking for is a rolling 168 1-hour candles. Every time one prints and closes, this old one falls off and it just keeps moving forward. So, and then we have a little bit of ratio, so you don't get the kind of the flippy floppy fish kind of stuff going on, right? Like you look at it in the morning and then it's bullish, and you look at it in the afternoon because a couple candle closes on the 1 hour, all of a sudden it's bearish. You don't want to see that kind of stuff. So that's what we're avoiding, is this choppy mess going on. So there is some percentages and stuff that we built in. So really, in the end, what we're looking for is you can see that these are grayed out. Also, right through here, it does tell you, we call it the death zone. It's just kind of choppy. It's not really giving you a trade setup at all. So you can go over in these areas and take a look, but you can see right here, there's nothing for you. So the system isn't going to give you an option to take a trade because it's basically saying based on these parameters, it's not going to fly. So the only chart that really gave us some energy today was Solana. And again, if I go over here, it's only giving you the long because the short is too tight. So that's kind of neat to see too, because it's really pushing pretty hard for that long. So really, if I was going to take that long on Solana, that's really the only trade I have, just to break it down. So now, if we start to break into the charts, if we go to Bitcoin, you can see, well, man, you just told me all this. It wasn't going to go anywhere. It didn't have any really potential, but here we are on this chart here, and it went up, had a nice move. So here we go, boom, boom, breaks above, back tested right here and just ripped. Now you can see that I did kind of put this trade on here. Now, would I have taken it? No, I wouldn't have, because the system was not saying it was good. If you measure the gap, and the gap is actually the daily resistance to the breakout trigger, and then the daily support to the breakdown trigger. So you're measuring those two areas. That's where you're getting those percentages. If they're less than 0.5, you don't want to trade. That's why I didn't give you trades today on BTC. So yes, it was a nice move. Yes, it moved up. It did have opportunity. If this was the trade that you took, you could have ran it up to the pole here. This is roughly a target 2. You more than likely, though, for safety, you would have traded down here on the 30-minute low is what you should have been. So this would have gave you a 1-to-1. Is it still a good trade? Yeah, if you had a reason to get in. The hard thing is you didn't really get clarity for a strong entry. You got the close above, the next candle just ripped, and one of the biggest things is gap. It's like 40% roughly. If you're trying to check off some boxes here, if you're saying, hey, do I want to take this trade? Well, 40% roughly is weighed on the gap percentage between your daily support and resistance. Out of everything, that's what we're really looking for. So in this case, it didn't have it. So really, you want to stay away from it, because a lot of times you could see a whipsaw out and snap right back in. That's a very high percentage. I'm going to go ahead and move on over to Solana here. And mainly because that was a trade that, yes, you could take. But the downfall, again, for me, I couldn't take it. I didn't take it. And you might be going, are you crazy? Why didn't you take it? Because this trade, if it ran all the way up to where it did, that was a 7.5 roughly to 1, give or take. If you just traded the way the system was designed, you would have traded the gap movement, which is definitely a 3-to-1. So to kind of give you an idea, you put $100 on, you make $300, 3-to-1. So awesome. That's what I got to say. That's awesome, a trade. But let's go ahead and take a look at why we didn't get in. We're on the 15-minute. We needed the 15-minute candle to close above the breakout trigger. So that's that green line right here. So it did break above it right here. It did snap above it. It went all the way back. It went all the way up to target 2, and then it closed. And then it traded back down a little bit. The hard part is one thing. This is the 8:30 Eastern Standard candle. That's when the stock market actually opens. So for me, it's the 8:30. I'm in Central Standard Time, so that's the 9:30 stock market candle on the New York Stock Exchange. Is what I'm saying. So when that opens, a lot of times you'll see energy kick in the charts. Volume will kick in. You kind of want to stay away from that time frame when you're looking for a setup. A lot of times, right after that, the market kind of tells you a direction. You get excited and ready to go, and that's exactly what it did here. It did give us that excitement and that energy, but it never really gave us a solid entry for us to get into. Because this candle right here is we were watching to see like how it's going to react. But once we kind of said, okay, well, this is looking pretty promising. Well, it already had started to move on out. Really, the risk to reward ratio was very hard to get in. You would have been all the way up into this area possibly to get in, and then you really didn't have a whole lot of move in it. So it was very aggressive, very fast. Kind of followed the whipsaw of BTC today. This is trading, to be honest. Like, that's why I'm showing you this. This is what the reality is when you're trying to make decisions. And I didn't take any trade opportunity because it didn't really give it to me. It was too aggressive when I wanted to get my entry. It didn't ever come back and really tell me this was going to be a solid move. It just expanded because there was so much compression on the longer time frames from being bear every single day, every single week, every single month for quite a while. So you're talking weeks that this has been in a down pattern. Energy has been burned out of the market. Everybody is like, this is going to go down forever. And that's usually when you start seeing the bounce back up. Now, the one thing I will say, 65 to around that 70 to 71,000 was kind of in the range that it's been playing in anyways. So where did it go all the way up to? Well, it ran all the way up and hit just under 70,000. So yeah, we ran all the way up, and let's actually take a look at this candle. If you look right up in here, you can see some numbers. I want to see the high. So I'm going to run my mouse over this candle, and you can see the high that it wicked up into was 70,090.1. So did it do what it needed to do? Yeah, it ripped all the way out and slammed into the ceiling, if you will, from higher time frames. This is a key area because if you look at your weekly and look at some Fibonacci levels, which we talked about in our videos, this is a key level, and it snapped right into it. If you were looking at trading this and you had ridden this up, this is like, get off. If this runs through it, cool, it can just keep going. More than likely, it's not going to happen. This is a solid, this is why you want to look at the higher time frame levels. That's why you hear me talk about like 65, 70, and then so on and so forth. 86,000 roughly. You're looking at 92 to 95,000. Those are all solid areas in the market where it's created strength on the longer time frames. So that's what we need to really be paying attention to when we're trading. And that's, if you know that, that's how you trade the short time frames, the 15-minute like we're talking about here. For strong, solid moves. Now, you can see that I did mark this area right here. All that is the distance between the trigger, the breakdown trigger, and the breakout trigger. That is the distance there. Pretty simple. And that sets your target right here. You can see that we did run all the way up, and then we came right back in and tested this area, and we're holding. This makes me a little bit excited because now when I'm looking at the next day, so today's Monday, when I'm looking at Tuesday in the morning and I'm going back to that market radar on Kubroto.com, and we're looking at it and we're analyzing it again, tomorrow could be a pretty good day because the levels reset every single day, every single morning, consistently over and over and over. So that's where it gets exciting, and we'll see kind of how the evening goes. Now, would I jump into a trade right now? No, why? It's the end of the day. The energy's low. We don't know what's going to happen during the night. It could still crash down off of this. It could not maybe clear through it. We are in a key area. Now, if we get above this, yeah, we could start seeing some energy. You might go, okay, well, how do I know this? I don't really understand what he's talking about. Well, let's go out into the daily right now. You can see the mess right now on the daily. Let me go ahead and move this. You can see this is our candle from the daily today, right? Look at this line right here. This is the 21 simple moving average. You can see how we got rejected, 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 rejected. And you can see how it came down and got bought back up, came down and got bought back up. You can see that it's fighting in this area. The other thing down before, it was coming down very aggressively, and then it started to flatten out over the end of the last week, into the weekend. And today was Monday. It makes sense for it to create this energy in the space. Yeah, go back into the weekly right here. This is awesome. We're about ready to get above last week's candle, a high. So if I look at this candle, going back up to the upper numbers up in here, and run my mouse over this, our high was 69,994. So today on this weekly candle, as of right now, we have wicked above it. Now, is this going to continue to wick and start to run up? Because if you're looking at the higher time frames, we could easily run all the way up, back up into this level. We could grind up and come back up into around the 86,000, right? That's what I was saying was another level that we want to see us get through. So the weekly could grind all the way back up there and reject and then continue on down. That's also where its 21 simple moving averages. But we also are on top of the 200. When you're in the higher time frames, you can use these moving averages to kind of go back and make it simple. So right now I'm kind of neutral on my week. We're not full bears yet on the week because we haven't got below the 200. We have a lot of people think this is where we're going to come down to, and I think that's why we're starting to see possible bounce. This could start to build here and start to grind. The first key level is, like I said, around that 71,000. Same thing with the daily. You can see right here, it came down, right, ran through, and then it couldn't get it back above the key level that we keep talking about. Let's see it grind. Right now, you're below the 200, but you're above the 21, so you're neutral on the daily. Are we going to just take off and run all the way back up to 96,000? That's the next target. Are you going to take out this 21, or are you going to take out this 200? Come after it. So we're starting pretty strong. We had a pretty steep slide, if you will, coming down. Now it's flattened out, and it could start getting underneath price action in the next day or two. Let's watch, right? This is encouraging. This is what you want to see if you're looking to be a bull. The other thing is what's going on the 4 hour. Well, we've been talking about this as well. We got above it. We're in neutral territory, and then we lost both of them, went back to bear territory, but the bulls came back in and bought it back up. And then we kind of played through the weekend during this time. And then we opened pretty aggressively, and it came up, and it basically is testing its 200, because right now we're neutral on the 4 hour. Now, if we get above this, that's pretty strong, because if you look at the 1 hour 4 hour, it kind of is in the middle, if you will, and then you have your hour or week and your daily over here, and then you have your 15-minute, 5-minute, those lower time frames down here, and they kind of are in a balancing scale, right? And then you have this in the center. What's it all balancing on? Well, it's the 4 hour, 1 hour, and if you're going to start to see the scale flip and start to show, okay, well, if the lower time frames start to change, they may change and go back from one way to the other, right? They might be bullish, then they're bearish, then they're bullish, and they're bearish. But it's really in that middle. So if that middle is sitting neutral or sitting one more bullish or more bearish, then it's going to weigh to the favor of one side. So right now it's been sitting bearish, and it's been weighing to the favor of the long side. Long side's bearish too, right? So now if we're going to say, well, how are we going to flip the long side to bullish, and how long am I going to wait? Am I going to wait to 96,000? Am I going to wait to 106,000? Am I going to wait? When are you going to wait? Because the longer time frames are going to have to rebuild, and they're going to take a while, right? The price action is going to be a lot higher. Well, you want to get in action now, right? So you want to get in earlier. So that's why you're looking at these different time frames. That's why I'm showing them to you. So if I'm looking at the 4 hour, again, let's keep this simple. I'm going to look at my 21 and my 200 on my 4 hour. Well, right now I'm 50-50, but we're testing the upper area. We've been being pushed down. If I go back on time, you can see how we lost these moving averages, right? And then we've been pushed down, bears, bears, bears. And then it's been playing with it and showing change in the market. We do have a pretty strong aggressive down behavior. That's probably why it's rejecting here. We do kind of expect this to flatten out. Now, if we get the 21 above this and we get price action above this, that's a very strong bullish move. That's what we're looking for. The 1 hour, guess what it did? It got above, it played with this price action, snapped above and ran up. This is a strong area of possible flagging right here. This could be a strong move here on this 4 hour, or this 1 hour, I mean, sorry. And if we're just kind of looking at standard potential for a breakout, this is sitting in it right now. So this could run up to that, right up into that 73.5 area on BTC. Now this could grind down and kind of come back and test this area, maybe grind back down in this lower 68,000 level. Not a bad thing, right? That's still a strong area of support, and we could see this fire here in the next 24 hours. That's okay. You know, I'll get on that run. I'm not too worried that I missed this aggressive move here. And but I am bullish now on the 1 hour. 1 hour I'm bullish. The 4 hour I'm almost bullish, but we're still neutral. We're moving in the right direction. Now, if it fails here and starts to go down, guess what happens? We're going to slowly, we're moving up the chain, right? And we're getting more and more bullish. And we're looking at, hey, everything's going to move, and we're watching this ahead of time so we can get the price action up to these higher time frames. But if we can't get through these key areas that I just talked about, it's going to start to go back the other way, and that middle is going to hold strength. And we know, okay, well, the higher time frames are still going to hold the bears. The middle is now holding the bears, and more than likely we're going to be looking at our trade opportunity in bearish. But really, we need to be paying attention now. Right now, it's telling us we need to start paying attention on days today and the next day and the next day, maybe to be a little more bullish, because we're starting to fight through some of these key levels that are going to move us in the right direction. So that's what I'm pointing out when I'm talking about these higher mid time frames, that we can set the higher time frames in the right direction. So the 15-minute, obviously, it definitely got very strong, got the cross through, very bullish behavior, and it pushed up. So that is about it, guys. Hopefully you understand. If you don't, ask questions, because what I'm showing you is why we take a trade, why we don't take a trade. And I showed you that today. I'm not hiding anything. We did not take a trade today because it didn't give us an entry to get into a trade. The other thing is the system didn't say we could take a trade. So there's two problems there, and that's why. So today was success. Oh yeah, today was a very solid success. The system played out. It did what it was supposed to do, and we followed it. That's a perfect day. Now, if you're looking at price action and always analyzing, well, I missed, I could have, should have, would have, then what happens when most of the time the system doing what it did today would have went up, rejected, and came right back down. It wouldn't have just fired out. So majority of the time, that's what you would have saw. And you don't want to get caught in that. So don't be like, I'm going to catch this one again. This would have been a lucky trade on most systems because it was very aggressive. It did show that it wanted to expand, but it hadn't give you the confirmation. By the time you got confirmation, it had already been on the run. You would have been jumping on a moving train. And I don't want to jump on it. Every time I've seen somebody jump on a moving train, it doesn't end well. Train better be going pretty slow for you to get on. And in fact, I'd rather have it not moving if I'm going to jump on and take a ride for myself. So anyway, guys, I'm going to go ahead and leave you with that. Hopefully this is very helpful for you. Like and subscribe. Put questions in the comments if you did find it helpful, or if you have pointers or a system that you like to follow. And I'd definitely like to hear about that as well, because we're always open to finding better entry potential. Also evaluating current price action. We definitely are looking at the last 24 hours from open to close in a session, and then we're setting what you see with us on today, what I just shared with you. So, all right, guys, I'm gonna go ahead and leave it at that. Thank you for hanging out, and good luck with your trading.